The rental market plunges. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article written by Jason Murphy on news.com.au. Sydney, Melbourne, Brisbane rent prices plummet amid the pandemic, the RBA reveals. Now, we've been discussing this, what feels like for months. Just the rental market getting hit in, well, first it was the decline in international students, then it was international tourism, and that was going to flood all the Airbnbs. And we saw, in Hobart in particular, I remember how high the numbers were there. Now there's some suburbs down in Victoria where, up to 100% increase in listings. And then recently we were seeing units, apartments sold by investors with a, slice off the top, 15% cut to get people in. Prices are falling, guys, particularly in the investor grade stock. So this is why, with rents going down and the prospect for capital growth evaporating in the short term, will people stay in this property market or will it flow on? And with rents being cheaper and cheaper, will people start to look at that rent money as dead money a bit differently and maybe wait a little bit longer? We'll have to see. I know rents aren't down in our area, that's for sure at the moment. I guess it depends on what you're looking at, what sector. So, that's what it said here. A certain sector of the housing market is in free fall, and it means everyone from buyers to renters, investors, and tradies are in for a big shock, and here is why. A massive change is sweeping Australia's housing market, and whether you rent, own, or invest, it's going to affect you. House prices are the flashy part of the housing market, but the Reserve Bank of Australia pays very close attention to rents. Rents are the ticking heartbeat of our housing market because they determine how much investors will earn from their portfolios. They are essentially worth watching in difficult times because even when the buying market slows down dramatically, people keep renting. The RBA released a huge new piece of research on the rental market during the pandemic, and it is essential reading, as the next graph shows. Rents have turned negative in some of Australia's biggest markets, and rents for units, i.e. mostly apartments, are suddenly in free fall, except for Perth, which has been a contrarian on property for years. Well, yeah, you're right there. So here's the advertised rents. I mean, look at Melbourne, guys. And it's units, guys. It's the investment stock. And we looked at an article a few days ago. Not really an article, an advertising pitch from developers who were pretty much given a meat raffle away to get people to buy their units. Because, wow, units aren't all equal, everyone. They're not all equal. I'm trying to bring up here one of my favorite other maps that I show. Look at the unit price growth. It's not equality there. So, look, Brisbane isn't doing too well, or too bad, although it's fallen. Houses have gone up. I wonder if people are getting out of apartments and going into houses, realizing that might be a stimulus for the housing sector, or at least for renting houses. If you're stuck in an apartment, I couldn't imagine anything worse being stuck in a little one bedder and not being able to get out and about. I've got my little yard here, and it is literally like a jungle. I just look outside. Then I can relax and think, look at all that yard work I have to do. Isn't that fantastic? Which bin can I stick all this green waste in? But Perth is a unique part of Australia's housing market. Sydney, Melbourne, and Brisbane represent a much higher number of homes, and in those cities it is hard to ask for higher rents because vacancies are high. A willing renter is suddenly hard to find. Young hospitality workers have moved back in with mum and dad as their income dried up. Overseas students are completely missing. And at the same time, the market has been flooded with thousands of Airbnb properties that would once have been full of tourists. And here's another thing to consider. Someone shared just an anecdote of academics losing their jobs at universities, and how many of these academics have also invested their passive income into student accommodation. So they've kind of sunk everything into the one sector, maybe not even realizing it. That's the worrying thing. When you want to get a diverse range of income sources, so if one starts struggling a bit, you can depend on the other. Around 40,000 properties that were on Airbnb in February had gone by May. And that's just one of the many short-term rental websites in Australia. In Sydney, vacancies are the highest they've been since 2003, while in Melbourne, they've immediately doubled. Imminently. That's not going to snap back all at once, because the RBA estimates that Australia will have 400,000 fewer people in it by June 2021 than expected. There you go, guys. And you can see here, housing vacancy rate. So he's gotten this from the chart pack. There's the inner suburbs. Look at Melbourne. There you go, guys. Look at Melbourne. Property prices. Property investors are used to losing money. That's what negative gearing is, but they have their limits. Oh, well, this is the thing, a big fall in property investment. The problem is negative gearing isn't a good thing if you're not making any money to offset it. You know, that's the sad reality. If you're unemployed, negative gearing is literally a drain on you. If even a fraction of investors offload their properties in 2021, it could create a wave of supply that will suppress property prices. This is especially likely for apartments because around Australia, approximately half of all apartments are rented out. 2021 could be a banner year for anyone keen to buy an apartment to live in. Apartments will be where the bargains will be found at first, especially in the inner city. As the next graph shows, the fall in rents has been savage in the inner cities of Melbourne and Sydney. Those dark blue areas in the centre of both cities might look small, but they represent tens of thousands of properties, and the renters there have tumbled. So, if you're forward thinking, it may be worth looking at jumping in on a little apartment in the city. If, say, you live remote and you want somewhere for your kids to live at when they study at university, buy something for half the price. Could that be worth it? Maybe not with all the costs, but maybe it could be. There are opportunities in recession. There are opportunities in difficult times. Just look at Arnold Schwarzenegger's story of how he was a millionaire before he even got into acting. Even if you own a house out in one of the lime green areas, you need to pay attention to the city housing markets. Apartment prices are connected to the price of freestanding homes. Not immediately, but eventually. Here's how it works. If young singles rent apartments a few years longer while they become young couples, and even as they become young couples with a kid, they lessen pressure on the market for houses. Share houses are also becoming a vanishing concept as suburban homes become the domain of families and renters take apartments. This is stating the obvious, but apartments and housings are substitutes for each other. If demand for one goes down, it eventually flows through to the other. The pipeline. The second big way a rental market collapse hits the Australian economy is via tradies. At the moment, tradies are hard at work finishing off big apartment projects that were started in 2019, 18, and even 2017 when times were good. If you go on the real estate website, you can find lots of ads for brand new developments. Those apartments will leak out into the market in the next year or so, suppressing rents and apartment prices even more. And we've seen some of the drastic measures they're taking to get people into apartments. We had here in Brisbane. Here in Brisbane, there's, like in South Brisbane, guys, there's like a flood of stock of apartments there. That whole area where we used to have our business in South Brisbane. We were renting a place there. We had a little warehouse at the back, and it just got flooded with apartments, and the traffic just went terrible. The only good thing about all of that was Aldi opened up, so we could always go to Aldi for shopping, but within walking distance. But other than that, it was a nightmare. I was stuck in traffic getting back home in the middle of the city, driving out. But and in that area, what they're doing is they're offering a year of free mortgage repayments. So they're discounting the apartments and dressing it up as mortgage repayments, which is smart marketing. Makes people feel better. Makes you feel like you're getting a deal. Developers know what will happen. Some projects they have in the early stages are getting put on ice. This hasn't shown up in the building approvals data yet. Building approvals are actually up in July, reflecting projects put in for approval earlier. But approved developments don't have to get built. It's likely a lot of apartment buildings will remain in plans for a few weeks, or a few years. And, well, you've got a period there of where your apartments... I'm going to delete this this messy bit there. There we go. Looks nice. You've got... That's going to flow through to my game, guys. To my game. Building approvals. You know, architects, I was talking to a lady yesterday who didn't realize she was gone from a developer in the city working for another person. And above her used to be an architectural practice, and she didn't realize that they'd get impacted by this, that they'd let people go, which I thought was quite hilarious because we're often the canaries in the coal mine. You know, it's the architects are the ones the developers are going to, so we're going to cop it. We're going to cop it. And here's foreign investment is going down. I didn't want to show that, but it's still relevant. So we'll have to see, guys. It's interesting. It depends on who you talk to in the game, how work is going, you know. I get the feeling that people have got stuff on, but they're still running around. The pipeline is getting quiet. The pipeline is getting quiet. So that will be bad news for the construction sector, which employs around 10% of Australians directly and indirectly. So far, construction workers have seen limited effects of the pandemic. Some were stood down, working just a few hours or 0 hours, but job losses have been limited. As the building supply chain dries up, all the businesses that sell to tradies will suffer too. Like the end of JobSeeker, a lot of this is still coming down the pipe. We all saw last week's unemployment numbers, and they were extremely promising, a fall in unemployment when experts anticipated a rise. But the risk is we forget the economy is still propped up by JobSeeker and JobKeeper. Exactly. Jason knows what's going on. We still need to navigate their removal. We've done brilliantly at protecting the economy from the worst of the impacts, but if we dust off our hands and think job's done, that's when the tidal wave will hit. The fall in rents is just the earliest sign of what could be heading our way. I mean, here's the question. Do you think it's inevitable? Do you think the government intervention could actually avoid the impact, or will it make it worse? Will they just drag out the recession and make the pain longer and worse? What do you think, everyone? Let me know your thoughts in the comments below. Are you in the construction game? How's your pipeline going? I mean, I put a fee for a job yesterday, and the market expectation is half of what I put in. And when you calculate that at an hourly rate, some people, I think, are struggling or just trying to keep the engine running and are running on fumes. We'll have to see, everyone. Thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, guys. Have a great day, and I will see you all in the next episode.